What is going on, everyone? Hootmoney here with another video for you guys today. Today we are going to be talking about Faraday Future Intelligent Electric, or FFIE stock, as it is up currently 67% as we speak, undergoing a short squeeze. Now, I'm not gonna just say go out and buy a stock that's up 67% on the day. Yes, it can continue into the next day, but it also may sell off. In the case of FFIE, it'll probably have somewhat of a small retracement before its next leg up. So again, guys, be careful. Don't just FOMO into these things, because you usually get a second opportunity to catch that next leg up. Anyways, drop a like on the video if you guys enjoy this content. Subscribe to the channel if you guys are new and you are enjoying what you guys are seeing here. And if you guys want Hootmoney trade alerts, we'd like to call out short squeezes before they even get started. That is the first link in the description, or first link in the pinned comment section down below. And you can join a Discord community of me and over 200 other members finding short squeeze plays before they happen. Anyways, let's get right into today's video. Woo! That was a mouthful. Anyways, here we have Market Cipher. If you guys are not familiar with Market Cipher, it is a momentum trading technical analysis indicator. It mainly uses these things called blue waves. If the blue wave is on the upside, it's overbought. If it's on the downside, it's oversold. But they have these other indicators as well, like this adjusted VWAP, which is this yellow right here, two different RSI indicators, which is that green and purple. It also turns red. So we'll be going over all of these different indicators. There's also different short sell signals and green signals as well. So let's just jump right into it. Here we have the daily chart. Daily chart looks very, very good. VWAP is pointing up very, very nicely, meaning that this momentum could continue for multiple days. It doesn't have to continue, but it definitely can continue. The one thing to watch out for right here is that it is approaching a very strong support or resistance level at about $6.40 right there. If we actually scroll into the minute chart, you guys will see that it acted as a pretty perfect resistance level after its parabolic run as the market opened right there. So it is definitely a level to put on your charts, because it's going to be a supply zone. I mean, you've seen it multiple times before. It reaches this level, it acts as a zone of supply. So I'd say even down to 573, honestly, maybe even down to like 538. This whole zone right here could just be seen as a supply zone. So keep that into consideration. If it does end up breaking out above 640, that's when you can assume that there's probably going to be some more upside to around $10 or so. Moving into the 4-hour chart, we'll get an idea from a shorter time frame. It's moving into green money flow. So this is a super important feature because it does show the beginning of an uptrend right here. Green money flow, right? It also coincided with a nice little uptrend. So the fact that we are going into green money flow, yes, we already are up a ton, but it does mean that it could continue. There's also nothing showing that the VWAP is going to cross over. Nothing really showing that this blue wave is done, although it is over 100 on that RSI. So it is on that overbought side, even though there is some more room to go. Here we have the hourly chart. The hourly chart as well doesn't really show that it's done yet. The VWAP's not close to being crossed over as of yet, but it does look like it is setting up for bearish divergence, as the VWAP is pointing down right there. You can see the yellow. We'll zoom in on it one more time. Boom, it is pointing down. There's also a little bit of bearish divergence. You can see blue wave right here. Connect the dot to this blue wave right here, and then we connect the price action, right? Price action has been going up. Blue wave's been coming down. That is some bearish divergence. So like I said earlier, this means you don't want to necessarily chase. It's probably not going to just leg down all the way back to 360 because of it, but you can always expect consolidation, perhaps a bull flag before that next leg up to new highs. Because remember, guys, we are also in that supply zone. So honestly, the best way to play this thing is to be patient, right? Don't just FOMO into it. It doesn't have to continue this momentum tomorrow, but it could end up just chilling out around these levels, around the mid fives, and then you can make that entry for the next move and the next leg up to new highs. Anyways, we can move into the Ortex data right here. You guys can see 100% utilization for pretty much this entire life cycle, starting in February 10th, 2022. It has seen 100% utilization since then. Then you can see right here, starting around May 20th, cost to borrow started going up from 13%, shooting up, seeing a high right here of 112%. Now it is sitting at 370% cost to borrow on average, 3% minimum cost to borrow. So someone's getting some cheap shares to borrow, but overall, I mean, this is just insane. Most people are paying over 300% to borrow this stock. Something I wanted to point out, which is very, very fishy, is the fact that short interest actually dropped before this big move. Now, that is a bullish sign. It's like, if you notice that yourself, you see, okay, if short interest coming down, it was at 26%, now it's down to 22%. That could be a sign for you to get in, because that is a bullish sign when shorts do start to close. However, it always leaves a sour taste in my mouth, because obviously the stock price is up right now. Some shorts knew something was going to happen, right? That's probably why they closed their position before it really spiked up today. And it just leaves a sour taste in my mouth, because it's like, okay, well, they're probably insider trading. They probably have some knowledge that we don't have, some data that we don't have. And it just, I don't know. It kind of bothers me. It kind of bothers me. Anyways, moving into Fintel, it's a 310 on the short squeeze leaderboard. It'll likely be a lot higher as of tomorrow. It'll probably be like top 20 tomorrow. 300 on that gamma squeeze leaderboard as well. We'll look at unusual whales in just a second. As of 11 hours ago, no shares available to be shorted. And this is throughout today's trading day. We have not seen any shares available to be shorted, or else they probably would have been able to kill this momentum a lot earlier on than they did. I mean, it ran from 336 to 640 without anything really in the way right there. And again, that's likely because there was no shares to borrow. There's no shares available to dump on the market all at once to take some of the momentum away. And here you guys can see cost to borrow now at 387% on Fintel, a nice and steady increase of cost to borrow over the past 2 weeks. Again, this is the sign that this is a super juicy play. I love to see when there's increasing cost to borrow, especially when the price action hasn't moved up yet. So if you were able to spot this out, that is big props to you. I mean, as of 6:30, June 30th, you could have just seen that it's doubled in a week, right? And that would have been a great sign to get in. I mean, it was still at a very low level at this point, right? June 30th. I mean, that was when it was just beginning this positive momentum. So it would have been absolutely phenomenal. Here's the short volume ratio. On Friday, there was 140,000 short exempts compared to the free float. This is not too crazy whatsoever. So we're just going to ignore that. And there's also not too many failure to delivers right there. It shouldn't have any significant impact on the price of the stock. One thing I did not mention is that it is on the threshold list, which means that failure to delivers are actively occurring in FFIE. So keep that in mind as well. It might not be showing up right here in the current failure to delivers, but it is most definitely being failed to deliver, especially today on the plus 56% move. Moving into the options, you guys can see this is institutional options only, calls and puts, obviously, and most of the premium is actually in calls. So, and this is from institutions as well. So they're either shorts that are hedging or they're just playing call options because, well, they think there's going to be some upside. So you can see that there was 109,000 premium on this call option. This was at 12:34, about 30 minutes ago from the time of me recording this video, and they're betting that this thing's going to go above $6.50 by 7-8. That's only in a few days. So they're betting that the momentum continues. This one right here, 20,000 premium, $11 strike price, expiring on 7/15. Again, all the puts are in super low premiums. The calls, another one right here, 94,000, $5, 7/15. So majority of institutions today are betting bullish, and you guys can see, I mean, it's just an insane flow. 44,000 was the biggest put option, and that was a $3.50 strike price expiring on 7/15. This is also the high, like the 20th highest institutionally traded stock in the entire market today. So that's also something to consider. Here we have unusual whales, $10,000 in premium or more, ask side only. So only buying calls, buying puts, not selling either one of those. And as you guys can see, I mean, it's been an absolutely insane day. Even with 250 results per page, I'm not seeing all of these option trades. It only goes back to 10:30 a.m. right there. So we're not going to have the full story here, but there's been some insane trades. I mean, $560,000 worth of premium right there on a call option expiring in January 2023. 345,000 right there, 250,000 right there, 284,000 right there. This is hedging, guys. This is not people buying call options to just make a ton of money, just get insane leverage. These are people that likely have short positions because of that super high short interest. They have to hedge their bets. That's usually what happens when we see these large institutional call option flow after a stock has already made a pretty significant move. They're just hedging for potentially more upside, and that happens all the time, my friends. As you guys can see, it is 84% bullish right now. Majority of the bulls are going for that 7/15 expiration, but there's also a decent amount going for November 18th and then January of 2023. These ones over here, probably more on the hedging side, and then these ones over here, the 7/15s, probably more on the speculation. We are going to the moon side of things. Anyways, here we have the daily flow breakdown, and there is a ton of call option volume as of today. As you guys saw, there has never been a point in history with this much call option on FFIE, so there will definitely be a ton of eyes on this stock ongoing for likely a few months now, right? It gets that first initial burst, then eyes are attracted on it, right? I mean, yeah, it's never had this much call option volume. So although it's risky to be getting in right now when call option volume is at an all-time high, it does probably mean that momentum does continue. I'm going to stick with my original thesis to let it consolidate first before just jumping in on it. Also, let that call option volume consolidate as well, because implied volatility is also probably pretty high, and that could come down a little bit over the next few days as well before that next leg up. Max pain for this week is at $3 per share, showing some downside, but max pain on 7/15, which is the monthly expiration, is at $4 per share. Call options and put options in general shouldn't have too much of an impact on this stock, at least up until this point today. Today, with all this call option volume, it should have more of an impact. So I'm not putting too much pressure on this max pain number, but it is at $4 per share, which does imply some downside risk over the next few weeks. Market makers will be trying to pin down that price. Gamma exposure is only on the positive side. We have positive net gamma exposure all the way from $3 to $6, actually all the way up to $10 per share. But overall, it's just not too much gamma exposure in general, and I honestly don't think at this point it should have a huge impact on the price. But after today and after all of this call option volume that we are seeing, options might actually start to affect this price. So it's something that we have to keep watching over the course of this rally that it's got going on here. Anyways, that's about it for the video. I hope you guys have enjoyed. As always, remember to drop a like on the video if you guys did enjoy. Subscribe to the channel if you are new and you want more content just like this that we post every single weekday. Every single day the stock market is open on this channel. And if you guys wanted to bag up with Hootmoney and find these short squeeze plays before they take off, you can do so using the first link in the description for Hootmoney trade alerts, the first link in the pinned comment section as well. That's all I got, my friends. I'll be seeing you guys next time.